Usually when a company receives an investment from nvidia, that company, that stock receives a lot of attention. The stock usually goes up, as we've seen last year with Recursion, with ARM, with SoundHound, with NanoX Imaging, etc., etc. All of these stocks went up quite a lot on the announcement that nvidia made an investment in those companies. Now, more recently, it was announced that the company that we're going to talk about in this video, Nebius Group, received an investment from nvidia, among others as well, and yet the company continues to fly under the radar. Actually, there is no analysts that are covering the company, the stock, at the moment, despite its size. It's $7.2 billion in market cap. Now, you might have never heard about Nebius Group, and well, maybe for good reasons, because they were listed on the Nasdaq back in October. Previously, that was part of Yandex. If you don't know what Yandex is basically the Google equivalent of Russia. But because of the war between Russia and Ukraine, they basically had to divest and separate themselves from any Russian links. And so the company Nebius was created. It's a company in the Netherlands, in Amsterdam. So let's dive a little bit deeper in this video. I do think that there is quite a lot of interesting aspects to its business, and the fact that it is still flying under the radar makes it even more attractive. At the time of making this video, I have no position in the company. I might open one in the next coming days. So full disclaimer. If you enjoy this type of videos, leave it a thumbs up, subscribe. If you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, as I said, this company was previously affiliated with Yandex, the so-called Google of Russia, but because of all the sanctions, if you wanted to do business, basically you had to separate any links from your business to Russia. And so that's how Nebius was created, and that's how they went back on the Nasdaq. In December, they announced an oversubscribed strategic equity financing of $700 million to accelerate the rollout of full-stack AI infrastructure. The investment comes from a select group of institutional and accredited investors, including participation from Accel, nvidia, and certain accounts managed by Orbis Investments. This will support additional capacity deployment in the United States and other key markets. The company now expects to deliver an annualized run rate revenue by year-end 2025 of between $750 million to $1 billion. The board has determined that a potential repurchase by the company of its Class A share is no longer warranted. And by the way, the ARR guidance did go up by $250 million from the low point. They also announced the launch of their first NVIDIA GPU cluster in the United States with a deployment in Kansas City, bringing its AI native cloud closer to American customers. Scheduled to go live in Q1 2025, the Kansas City cluster will house thousands of state-of-the-art NVIDIA GPUs, primarily NVIDIA Hopper GPUs in the initial phase, with the energy-efficient NVIDIA Blackwell platform expected to arrive in 2025. The colocation can be expanded from an initial 5 megawatt up to 40 megawatt, or about 35,000 GPUs at full potential capacity. So of course, the investment by NVIDIA, we've seen that with plenty of other companies. You could say that this is maybe a way that NVIDIA is, let's say, acquiring revenue through those investments, right? They invest in these companies then buy GPUs from NVIDIA. Nebius is actively ramping up its presence in the United States as part of its strategy to become a leading provider of AI infrastructure to AI builders globally, and is in advanced discussion for a second larger scale GPU cluster in the US, also slated to come online in 2025. The company has also opened 2 new customer-facing hubs in San Francisco and Dallas, with a third office set to open in New York later this year, which was back in 2024, back in just a couple of weeks ago. Now, last quarter, we've seen huge growth when it comes to revenue, but comes at no surprise since, well, it did start at a super low point. So revenue increased 766%. Total operating costs and expenses were up 45.6%. Net loss from continuing operation did improve by 46.4%. But then if you look at net income, well, it's a loss compared to 2023, but then again in 2023 you had a positive effect here from discontinued operations, and you get a negative effect from loss from disposal. If you go look at the last 9 months, comes from impairment charges as well. They also said that their cloud revenue surged 2.7 times quarter over quarter, almost 8 times year over year, of course, against the low base, with an ARR surpassing $120 million as of, well, the end of last quarter. So what's their plan here? First of all, when you buy Nebius Group, you get not just the core business, which is the AI-centric cloud platform, but you also get a couple of extra things. But to be honest, right now, if you invest in this company, I would suggest that you just focus on the core business because that is 2/3 of the revenue. That's what they told us last quarter. The rest is Toloka. That's a data partner for all stages of AI development from training to evaluation. Then you got this one right here, which is basically an education platform to reskill people. Okay, fine. Then you've got two, let's say, interesting thing. One, ClickHouse. They have approximately 28% stake in ClickHouse, a creator of a popular open source column-oriented DBMS. And then AV Ride, so autonomous driving technology for self-driving cars and delivery robots. More on that later. They have around 850 top-tier AI, ML, LLM cloud engineers and other tech specialists. I mean, they've done this before, right? This is people that have previous experience, yes, with Yandex and such, but these are people that have built up billions of dollars of businesses before. They'll have to do it again, and I mean, why not believe that they can? So the core business, which is the main focus, I would say, is Nebius AI. So they have the state-of-the-art own Finnish data center with approximately 14,000 GPUs paid and deployed. The fact that it's also in a cold area definitely helps. They are building specialized AI cloud. They're competing with the likes of CoreWeave, Lambda, etc. We're going to talk about CoreWeave at the end. They're a full stack and efficient infrastructure platform, and they expect that their 2025 ARR, as we've seen, will grow not just from 500 million to $1 billion, but from 750 million to $1 billion. They also have enough cash at the moment. They've got over $2 billion as of last quarter, plus you can add now the $700 million on top of it. So they've got enough cash for now. I do expect maybe some more raises in the future. As for the outlook, they expect revenue to increase at least 5x and become adjusted EBITDA positive in 2025. For 2024, they expect revenue to become between $70 to $80 million, ARR between $170 and $190 million, adjusted EBITDA a loss here $60 to $70 million, but they're still spending quite a lot on capex, around $1 billion. Now in 2025, they're expected to spend between $600 million to $1.5 billion on capex. Most of it will be invested in nvidia GB200 GPUs, as well as expansion of their data center capacity. So of course, all the money that comes in gets basically spent on nvidia products. With regards to the other business, you've got Toloka. They expect 2025 revenue to be around $50 to $70 million. Capex for Toloka are immaterial. With regards to the educational platform, they expect revenue to be between $40 to $60 million. Here, capex also immaterial. As for AV Ride, up to $150 million combined funding need expected in 2024-2025. Initial revenue expected from partnership with Uber and other sources. So like I said, it's, let's say, the call option. All of these strings are call options. Focus on the core business. Switching back to the CoreWeave comparison, we've had here Citron Research. You love them or you hate them. There's basically no in between. So they said the following. Citron is pounding the table that Nebius is poised to be the next AI Wall Street darling. A sleeper with no analyst coverage yet, the market hasn't caught on to its massive potential or its undervaluation versus CoreWeave. They say the following. If it trades at a 50% discount to CoreWeave multiple, that puts Nebius at around $60 napkin math, which basically means 100% upside from the price we're at today based on their napkin math, which I don't have access to that napkin. Then they said that the CEO is the real deal. NVIDIA's investment was not out of the blue. They have known the company for a decade and were waiting for complete divestiture. The links with Russia, of course. So much optionality in so many different ways. Fortress balance sheet. As we've seen, enough cash and way more cash than what other small AI startups have. Now the difference between Nebius and CoreWeave is as follows. This is very, very simply put. Focus for Nebius, comprehensive AI platform. CoreWeave, high performance computing infrastructure. The target audience is also a bit different. Nebius, enterprises, researchers, developers. Then, of course, with all the sub-businesses, you've got other target audiences, but we just focus on the core here. CoreWeave, AI, ML, machine learning training, VFX rendering, HPC users. As for the services, Nebius offers a broad suite of services, infrastructure, software tools, pre-trained models, platform. They also own the data center and the hardware. Whereas CoreWeave, what do they offer? Primarily raw computing power with optimized infrastructure. And well, the infrastructure focus here is on optimized existing cloud infrastructure. The similarities are that both specialize in providing cloud infrastructure for AI workloads. Both offer powerful computing resources suitable for demanding tasks. And so if we go and look at, well, the evaluation for CoreWeave, the last one that I found here is that they're targeting a valuation exceeding $35 billion in its US initial public offering, or IPO, expected to go public in 25, maybe 2026. So yeah, if they are worth that much, and we've just seen how much Nebius is worth, of course, we don't really know the details for CoreWeave, revenue-wise, growth rates, and all of that. But if that happens, if they go public at $35 billion, just the fact that they will go public and you can link Nebius to CoreWeave, that will already pump up the stock. Of course, fundamentally, you would like to see the business grow revenue and become more profitable over time. But if you're purely looking for a short-term stock pump, yeah, something like this happening will definitely help. Now, of course, for Nebius to grow this quickly, to increase revenue by at least 5x, it does come at the expense of, well, capital expenditures. They have to invest quite a lot. The GPUs cost quite a lot of money. Building out data centers and all of that cost a lot of money. So yeah, there are still going to be quite of investments made in the future. But since we're starting from such a low base revenue-wise, I think we're going to see this company increase revenue quite rapidly in the next coming years. And then it becomes a story of, can they be profitable while also expanding? They say they're going to try to become adjusted EBITDA positive in 2025. Remains to be seen if that is achievable. But the goals here are definitely not to be just another AI player, a small AI player, but become a giant AI player. So yeah, it's true that $7+ billion in market cap is not the smallest AI company that we've seen, but this one is growing quite rapidly. It has very, very close links with nvidia. As it's in Europe as well, so having such a strong player in Europe and building out infrastructure in the United States is definitely a plus point. This is a company with leadership and people inside the company that have already experienced building multiple billion-dollar companies, using AI, building infrastructure. So you put all of that together, and I think you might have something special here, especially since no analyst is covering this company just yet. Now, of course, since they just came back on the NASDAQ, I would still love to get more and more, well, reports that are audited. So hopefully we'll get those, well, throughout the next couple of quarters. Like I said, I will probably initiate a small position in the next coming days. It might not be a super long-term position to hold, but I do think that, yes, there's definitely going to be some momentum with this when Wall Street will start paying attention to this company. Are the X links to Russia an issue? In my opinion, no. The fact that they completely divested, separated the links, they're back on the NASDAQ, I think that should be good enough. But of course, if that's not good enough for you, you should definitely not invest in that company. So all in all, that's about it. Do share your thoughts down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.